Welcome all to the node. I am Mike, aka Veteran Crypto, and joining me shortly will be David, I'm sure, as he is always fashionably late. But until then, we'll go ahead and kick this thing off. So, if you're not familiar with our channel, this is your place for DeFi, crypto, and TradFi news as it pertains to investing. Also, we do interviews and we do education. So, if you are interested in free education, a lot of channels charge for this. We give it away. You can go to the node.pro. That is our official website. And you can come here to the Learn tab, and there is structured courses. If you want to learn about, crypto, DeFi, hot and cold wallets, all the different aspects of, investing in these assets that you might want to learn, so that you can better understand what it is that you're investing in. The community tab. If you pop on that, then you can come in here. You can chat with me. You can chat with David. You can chat with the rest of the community. If you have questions, comments, whatever. And then our intel library. So the second half of every show, every morning, is we do deep dives. And these are deep dives into individual projects. And today we're going to be doing Optimism and TAO. So, but if we'll go ahead and jump on into this one and I'll show you. So each one of these deep dives has about an 8 to 10 minute video that gives you, kind of the overview of the entire project, its tokenomics, what it is that they're doing, its use case, all of that sort of stuff. You can read through a lot of the material, and if you prefer, there's a slide deck, and there's also a source document. And this is probably the most important document in here, because if you scroll to the bottom of it, you're going to find these hyperlinks. And in these hyperlinks are the cited sources that we use to build out this information. So this isn't just us, speculating or doing guesswork like a lot of the content that you see out there. We're not saying if and it's possible and we heard a rumor. This is, for the most part, primary sources. So from the official website of the project, things like that. It's because if you're going to invest and if you want to speculate, that's on you. We are here to simply give you the facts to build a foundation of if you see the project being worth doing extra, research on. So we'll give you the foundation. If you want to, up your risk profile and speculate from there, that's on you. We are not exactly, facts are not FUD. We are not here to influence you to buy or sell anything. We are simply here to give you the facts. What you do with those facts is 100% up to you. So appreciate you, Lloyd. Very, very much so. It's good. We're actually starting to see a lot of people starting to resonate with our message of just putting out, good, solid, factual information without speculation. So there's plenty of places. If you want speculation and price predictions, plenty of places for that. So David, how's it going this morning?
Well, Mike, this morning I have been, over the last couple of days, actually, the last 48, 72 hours, I've been testing Runway, getrunway.trade. So I've been testing it on the crypto book. And just as of today, this morning, I'm getting it up and running on the TradFi book. And dude, this is looking pretty good, pretty darn good so far. Nice. I mean, it is, it's pretty amazing, man. The Sharpe ratio is like astronomically high. So yeah, it's pretty exciting, man. I can't wait to be able to share it with everyone. I mean, it's basically like, dude, it's a crypto and TradFi statistical arbitrage hedge fund that anyone can run. That's what it is. And I'm running it for myself, and then I'm going to make it available to the world. So yeah, just started testing the thing, man. And look, it's been several months in the works, and now finally I've gotten to the point where I'm testing it with real money on Hyperliquid. Nice. And it's making money, dude. It's like
Oh,
amazing.
that's
So
always a good thing.
yeah, it's a good thing. Yeah, it's a good thing. So very, very excited about that.
Awesome. All right. So let's go ahead and jump in the news. We got about 50 minutes to go through some of this before we get in the deep dives. But it looks like there was a little bit of trouble in paradise. Why an Ethereum proposal to zero out staking yield sparked a revolt. So an Ethereum proposal to zero out staking yield has the community in revolt. Seth Gins of Franklin Crypto weighs in on whether it solves a real problem plus the clarity delay. So it looks like they're facing a proposal that could push staking yield to zero. And the community's reaction has been closer to revolt than debate. So the chief investment officer at Franklin Crypto looks like they had a discussion about it, but it would erase Ethereum's issuance once roughly 60.25 million ETH being staked. Gins calls it an academic push that skipped the coordination institutions now expect, while Perkins argued the foundation is about to prove it has no real control over the network it built. They also cover why institutions keep citing the Bybit hack as a reason to stay off Ethereum. The Clarity Act's ethics standoff ahead of its September 15 vote, a weak jobs report that left the Fed's next move unclear, and Cloudflare's disclosure that AI agents now make up more than half of its network traffic. If Ethereum rejects the institutions weighing in on its own monetary policy, Campbell says its token should probably trade at a fraction of its current value. So this is part of what we're talking about when we discuss the tokenomics of these assets and what investors, real investors, are going to be looking at as far as if they're going to be buying these tokens and coins or not. So, David, what's your thoughts on this?
I think, if I'm not mistaken, Mike, that article, can you bring that article back up on the screen if you don't mind? What was the date of publication of that article there?
Looks like August 12th. So today.
Okay. And I think that the proposal that they're referring to in that article is EIP something or other. I saw it. It was one of the proposals that got a ton of pushback, and it wasn't to zero out staking yield. That's not what the proposal was at all. It was to significantly curtail and reduce staking yield at a certain point, but not to zero it out. And if you
might be a different proposal then, because I mean, and this, not to say that this is 100% correct, but I mean they're pretty adamant that there's that this proposal was to zero out staking yield.
Yeah, can you scroll down to the bottom of that article there? The last. Okay, right there. So it was just the last sentence or two. So yeah, right here. So okay, Clarity Acts, ethics standoff, weak jobs report, Cloudflare disclosure, blah blah blah. Okay, if Ethereum rejects the institutions weighing in on its own monetary policy, so if Ethereum rejects the institutions weighing in on its own monetary policy, its token should probably trade at a fraction of its current value. So, we talk about facts, not FUD. And these guys, number one, I think that they're, miscategorizing or mischaracterizing the actual EIP. I think that they're mischaracterizing the actual EIP, number one. And number two, it's pretty darn clear to me that the Ethereum Foundation really has very little influence now over Ethereum itself. That's the way that it's looking to me. It's looking more.
Isn't that the way it's supposed to be if it's decentralized?
Well, but who has the authority over it now? Is it corporate? Is it corporate entities?
Nobody should. If it's decentralized, it's nobody should have authority over it.
Well, I mean, you take a look at something like Bitcoin, which is very decentralized, and yet you do have, there are people, humans, who have authority over, how the network is going to evolve over time. Same thing is true with
Well,
Ethereum.
they don't have total if it's decentralized, they don't have total authority. They can propose, put forth proposals, and the decentralized committee is the ones that decide. And in Bitcoin's case, my understanding is that the miners, are the ones that get to decide which BIPs pass, and things like that. So I mean, that's how a decentralized network is supposed to work.
So I think that, the point that they're trying to make here is that there was a revolt, which there was. I know which proposal they're referring to, but they're mischaracterizing it. It wasn't to zero out staking yield. It was to significantly curtail it, like at a certain point. And the community like flat out rejected it. It was a revolt because it was a horrible proposal. And I think that anyone who was part of the Ethereum Foundation who put forward that EIP, they should be fired, man. It was like a horrible, horrible proposal. And yeah, yeah.
Well, I mean, already, Ethereum fees, and I mean, I think it's a good thing because, I mean, shit, those of you that have been around a minute, you remember the fees that were being charged for doing a transaction on Ethereum mainnet. I mean, I remember there was a couple of them. I paid like a couple of $100, especially if the network was busy. So, that was something that really, you know, Ethereum took a hit when it came to the amount of fees that the people processing were making, and I think it probably had a little bit to do. And I wouldn't mind hearing your thoughts on it, but I would think that had a little bit to do with kind of the weak bull run that it had this last bull run, because it didn't see the multiples that it usually did in the past during bull runs when there was a lot of transactions, and with the increased network traffic, fees skyrocketed. So I kind of wonder if maybe that played a role in kind of the weak rally that Ethereum had the last bull run. I mean, what are your thoughts on that?
We always talk about the trifecta, right? And Ethereum has a ton of user growth and user adoption. And those users are driving real revenues on a lot of Ethereum's chains. What we need to drill down on, and I think the deep dive piece of research that we produced recently did a little bit of this, is we need to drill down on whether that means real revenue, like value capture for ETH the coin.
Yeah.
I think it kind of does, but I'm not convinced that it really does. And then when you take a look at, I think it's all about blobs, right? Like the blobs are what drive the value capture for the Ethereum coin from the layer twos. I think that that's what it comes down to. But then again, Mike, like we read that Ethereum Foundation manifesto, dude, and that was like, for anyone who holds ETH, that manifesto was kind of terrifying, dude. Like that
It
was
was,
like,
yeah, like
yeah, it
that.
was
They
not
they
not
they
good.
they put out their own FUD, with that
I know they really
with that
did.
manifesto. And it wasn't necessarily that there was content in it that was bearish for the token. It was more that, like, these are the people that are running this thing. I
Right,
mean,
dude.
if you haven't seen that, I highly suggest you go find it. The ETH manifesto, because I mean, it's literally, it had like unicorns and rainbows on it. They were talking about like this utopia, and it was just weird. I thought it was a joke at first, but
No, it was no joke. And so that
unfortunately,
that that last article, Mike, it's like, okay, who's running Ethereum now? Is
yeah.
it that crazy foundation, or is it corporates who
Yeah.
own a ton of ETH? I don't
And
know.
building on it, because there is, I mean, there's no shortage of adoption of ETH. And that the deep dive that we did on it, it wasn't super fucking bullish, just like the one on Bitcoin. Um, it just it really depends on your thesis on investing, because here we focus more on value capture, on fees and revenue that are generated, and and the tokens connection to that is value capture and adoption. There is still plenty of money to be made in speculation. That's just not our focus here. There's again, there's plenty of channels out there that are will give you the the bullish case for speculation. And so, I mean, there's plenty of other places that you're going to get that. So we're trying to do something a bit different here. We're trying to give you the more traditional style of investing of, is there actual customers, not if or maybe, or there's a rumor of, there's plenty of that. We're looking for actual real projects that are either actively building and they're public about it, not an NDA was signed or anything like that. They are like the DTCC with Canton. They did a soft launch. They are scheduled, hard scheduled, unless some major thing happens, event happens where the Canton network has this major exploit and it's everyone stops adopting it. God forbid. But in October, they are doing the full launch, and they're just kind of doing the soft launch right now. But those are the types of things we're looking for. We're looking for real solid adoption, and those products and services that are offered by these projects, they generate real fees and revenue that accrue back to the token so that we, the token holders, can actually share in those profits. That is our whole thesis here. If it doesn't meet that trifecta, not interested. Can you make money? Oh, go ahead.
Yeah, it's kind of tough to be interested if it doesn't meet that trifecta, but there are some projects that don't meet the trifecta, and yet, like Bitcoin, for example, that I still, I wouldn't necessarily call myself a Bitcoin maxi, but, it doesn't quite meet the trifecta, and yet, look, I love Bitcoin. So, yeah, I think that maybe sometimes there are exceptions.
I mean, there is. I mean, if you look at, like, I have a bag of Link, not saying run out and buy it. If we mention something on this channel, it doesn't mean run out and buy it. But Link, the terrible tokenomics, but the company, its product, its interoperability product is being adopted everywhere. So my speculative bet is that people that are new to crypto and a lot of people that are in crypto, they are going to invest in the token because of mindshare. There's going to be a lot of people talking about it. There's always going to be news articles coming out where, insert name here is adopting it, they're using it, and there is a value there. And I'm looking, it's not a long-term hold for me. I'm hoping for a decent pump, like a 5 or 10x, and I'm selling all my Link. Full disclosure. And, I might keep a very small bag just in case it does something, insane, or they change the tokenomics, because there is projects out there that have changed their tokenomics. But for the most part, I'm selling my entire bag. I'm just looking for, a 5 to 10x on my portfolio. And most of the stuff I'm invested in, I'll be out of. And I'll be using DeFi, putting it in the stables, earning yield. There's not a ton of, there's a handful of projects that I'm bullish on long-term in crypto.
Me too. I can literally mention like 5, and like we're going to be talking about one of them today. And I think I'm bullish on Bittensor TAO, but I'm not quite sure, because I know that there were some major changes to Bittensor TAO's tokenomics. So for me, it's Bitcoin, Ethereum, Solana. I happen to like Tron because of all the stables there and the value capture model. And I like Canton. That's 5. Bitcoin eats Sol, Tron, Canton. That's it, man. I think that Bittensor TAO might fit in there, but that's about it. That's all I got.
Pretty much for me. And again, not saying run out and grab any of these. A lot of these are just my little speculative plays. I have my solid ones and I have some speculative plays, but I don't like to encourage other people to speculate. Like I said, there's plenty of that out there. So my plays are Bitcoin, Ethereum, Sol. I'm looking at Arrow. I have a very large bag of Arrow. Canton. What else do I have here?
Yeah, so I see what Crypto Stevo is saying in the chat that Tron's tech is weak. And, here's the thing, though, man. There's $90 billion of USDT on Tron, and the value capture seems to be pretty solid. So yeah, no, I agree with
All right.
you that the tech is weak, but value capture looks legit. So,
So
and you take a
here,
look at the performance, it's been pretty good.
so here's my plays. So Aerodrome, Canton, Bitcoin, Ethereum, Chainlink. Uh, I have a bag of Morpho for the same reason I have a bag of Chainlink. Morphos and tokenomics suck. It's a DeFi platform that you can't earn yield off of, really. Not even on their platform, there really isn't. Last I looked,
What you mean by that, Mike, is that you can't do much with the Morpho coin itself, the Morpho
exactly.
token. Yeah.
Yeah, I mean, it's not like there's staking or pools you can put it in, or there's no way to really earn yield with it. There's a couple of DeFi plays, but you would think with their own token somewhere on their platform, there would be some sort of pool or something. I don't know.
So what you're saying is there really isn't much utility for the Morpho token. Yeah.
Exactly. Same thing as Chainlink. But I with everything that Morpho is, its integration into a Coinbase, where it's facilitating the Bitcoin loans and a lot of that functionality. Morpho is the back end for that.
Well, that's
So,
great, but what does that mean for you if you hold Morpho, the token?
well, I mean, as far as our trifecta, it means that it a whole bunch of nothing. But
Right?
but
Yeah.
again, there is value in speculation. Still is plenty of people that don't understand value capture. There's a bunch of people that this next bull run, because of these institutions, that are investing in it. And as they start to realize that this is a tech that is being adopted by these large institutions and banks and things like that, people are going to want to invest in it. And they're going to look at TikTok. They're going to look at a lot of these, different social media, outlets, and they're going to see people talking about Morpho and it's the work it's doing with Coinbase and all Franklin Templeton and all these different BlackRock and all these big names that have vaults, and there is value there. I would not tell anybody to go out there unless you have a high risk profile, to speculate like that, but it's your money. Do it.
Mike,
Do what you
you see
want.
what Thinking Bullish is saying in the chat. I lost a good amount of Tron in an old wallet that was bugged on a dead laptop from 2018. My dog literally ate the recovery
Oh,
phrase.
good Lord.
You talking about dog ate my homework? Dog ate my recovery phrase. Oh my
And then he said
goodness!
for that reason he wants Tron to fail.
Oh man, well hey, $90 billion of USDT on Tron, man, and it's used for payments and remittances a lot in Southeast Asia and Latin America. So it's got a sordid history though, and I'm not sure that I trust the dude who built the thing like at all. So there are problems there, but at the same time, you look at its price performance, dude. Like it's one of the best performing digital assets. Period. Like especially
Yeah.
since 2020, it's put in like a 50 bagger and it's held on to
So,
most of the gains. So that's pretty solid.
so I have a couple where I just have, a little bit of money in, Hyperliquid I got a bag of, but, as David has pointed out, there's a lot of,
Regulatory risk.
regulatory
Yeah.
risk. I have a little bit of Zama. We did a deep dive on it and it looked interesting. I'm up
That's the
about,
privacy one, right?
yeah, I'm up
Yeah.
about 32% on that investment. T-Rise is a base network play that is also on Canton Network for tokenization. Got a little bit of money in that. I got a little bit of TAO, but I have a bunch of them. I just have like 200 or 300 bucks in, just in case. Good solid projects, good solid tokenomics, but I don't see where I want to invest heavily in those. But my biggest plays are Arrow, Canton, Bitcoin, Ethereum is kind of my four.
Yeah, I've been thinking, honestly, Mike, I've been thinking more and more about you know, going much more heavily into Bitcoin for this next bull and kind of saying, hey, you know what? The rest of the projects, yeah, I'll have an allocation, but I've been thinking maybe I should do more than 40 or 50% into BTC. Maybe it should be something like 60 or 70% in BTC. That's what I've been thinking about. I'm not quite sure yet, but I'm just doing my best to. I want to whittle things down. I want to focus on what I think are going to be the winners and just like ignore everything else, really.
Yeah. No. Actually, you know what? Let's hit this one up real quick. So a bit of Canton news. So Broadridge, those that don't know, there is a new proposal that's being put forward, and Canton is centralized. We'll just call it what it is. I know that it says it's decentralized, but my understanding is if they want to do something, they're going to do it. And the CEO has said that, and I could be wrong. I mean, but
That's
my
not
understanding
necessarily a bad thing, though, Mike.
no,
Like,
no,
if
no, no.
you know,
It's not. It's not. But what I'm getting at is that the CEO, Ruse, Mr. Ruse, he said that they are making a change to the burn, so that they used to be called subnets. They're changing the verbiage to network extensions. And Broadridge, I learned recently. We learn stuff here all the time. We don't know everything. Me and David learned that. Sorry, my phone. We learned that the Broadridge, the massive amount of repo volume that is on the Canton network, doesn't burn Canton currently. So that 8 trillion in repo volume does not burn any the CC coin. So if that CIP passes to where that starts burning, that is going to be massive.
oh, dude, I think that not
Oh,
only
check
would it
this
be
out.
massive, but it would probably mean number goes straight up for that CC token. Look at that!
Yeah,
Wow,
yeah,
yeah, that's us.
we're featured on Canton News.
That's so cool, man. That's so cool. I love it.
Those of you that don't know, Thursdays, right after this show on Thursdays, we host the spaces for Canton News. So if you're interested, tune in for that. Tomorrow we'll be talking with them. An exciting new project on Canton. But
Ekiden.
Ekiden. Yep. Thank you. So it looks like Broadridge Financial Solutions, part of Canton Network ecosystem, has processed 8 trillion in repo transactions through its blockchain-based distributed ledger repo platform known as DLR during just the month of July, with average daily volume reaching 365 billion daily, up 28% year over year. So this is what I'm talking about. Right now, the burn is sitting at like around 0.7, roughly. At a full value of 1, the Canton token flips deflationary. So without the largest, customer with the largest amount of transactions, without that burning CC, we're already at 0.7. So if that it's a speculation, if that CIP passes and this starts burning CC, my guess, and I definitely want to hear what you have to say, David, but my guess is this flips deflationary.
Well, yeah, I think it definitely will flip deflationary. Like it sounds like almost overnight if this CIP passes, and at that point, it's just a matter of how do you model what the CC token does once it becomes deflationary, assuming that it does become deflationary.
Yeah.
Like, how do you model that? It sounds like token price in dollars, like number go up. That's what it sounds like to me. But how high? How much does it run?
Yeah.
Does it run up to $1? Does it put in a 10 bagger? I don't see why not. It's just how do you model that? I think the guy who's put out some content about that so far is Scott over at Longview Compute. He's been, I think that he did put out a model, but it sounds like an interesting play, Canton Network, to me. What we should do at some point, Mike, is take a look at some of the wallets in more detail, like the 5N Loop and Braun. Those seem to be the two wallets that most people are using as of right now to self-custody. I know that there are challenges with both of them, but What do you think about that?
So I know Scott did a really good deep dive, and I believe he did an interview with one of somebody from the Braun wallet, and they did like a live demo and stuff like that. So for that one, I would almost say just go over and watch Scott's, because I mean, if he has one of the people from the project there that went through it with him, that's probably going to be hard to beat that. With Scott as knowledgeable as he is about Canton, and then having somebody from the project. But I definitely think that we need to start diving into some wallets. I know that there's some new ones coming out that Scott has talked to us about, and some that look like they're going to have a lot of functionality. So I'll be interested to see what that looks like, and then I'm going to be really interested to see what wallets are going to take advantage once Zenith launches with a lot of the Ethereum dApps and that interoperability. I'm going to be interested to see what wallets are ready for a lot of that functionality, added functionality.
Yeah, man, that's going to be really interesting. So if I'm, operating on an EVM chain dApp that's running on a Zenith Canton mainnet extension and settling on the Canton network, what wallet do I use to interact with that dApp? Is there a Zenith wallet that I use? I have no idea, but it's going to be cool though, whatever it is.
Yeah, no, it'll be interesting to see. So it looks like Coinbase won an Abu Dhabi license for international tokenized stock offerings. So the Financial Services Regulatory Authority cleared Coinbase to arrange investment deals and custody assets for its tokenized securities offerings from Abu Dhabi Global Market, with dividends and voting rights attached and no brokerage account required. Love them or hate them, Coinbase is doing huge things. So they've won financial services permission from Abu Dhabi's Financial Services Regulatory Authority to run a hub inside Abu Dhabi. The permission covers arranging investment deals, holding client assets in custody for its tokenized securities offerings. Coinbase said the tokens will be fully backed by the underlying shares. That's important. Under FSRA supervision, and that holders keep full shareholder rights, including dividends and voting. This is bullish because it's one thing that I was worried about, because I bought STRC, which is
And
strategy.
you've done really well on STRC. You were buying it at like 80 or something.
Yeah,
Yeah.
and it bounced back like we figured it would. And I'm earning dividends. So I bought it on Coinbase, and I was worried because I actually did some research, and my research found that that they didn't pay dividends, and I was going to move it over to Robinhood or something, and then I started earning dividends, and so I've just been holding on to it until I see something I want to invest that liquidity in. But yeah, no, I made a whole year's worth of dividends off of just investing at it on that dip. So
That's pretty awesome.
yeah. So I mean, that's that's kind of what we try to help people do here, is find those little gems, those little opportunities, to where, because I mean they're going to do everything possible. Michael Saylor and strategy and all that. They're going to do everything possible to protect their stock, and both master and strategy. They're STRC, and that's what they've been doing. They've been selling Bitcoin to make sure that they can pay those dividends, to give people confidence so that they keep buying it, and that's what's helped get that to recover. Is people were worried with the dip in Bitcoin, that they were going to have to start selling all of the Bitcoin that they've been building up, and that potentially the stock was gonna suffer because of it. So I don't know, what are your thoughts? I mean, like, what have you been doing with the stocks and things like that recently?
I've been building a statistical arbitrage spread trading book on the XYZ markets over on Hyperliquid. And that is about to launch today. So I already launched the crypto book, and now the TradFi book is launching. The Sharpe ratio on the crypto book is fucking high, man. It's amazing. So again, I've only got like a couple days of data so far. I've got like 2 days of data, but the fact that out the gate, it's immediately profitable, immediately working. All the stats look great right from the gate. That's very encouraging. And I think that the TradFi book is going to do, just as well, if not better. The one thing about the TradFi book, though, Mike, is TradFi doesn't trade 24/7, 365 like crypto does. And in many of those, just about all of the TradFi markets, except for like the commodities, you've got earnings. And those earnings are going to really move those items, those markets. So think about it this way. A stat R book is long short. So you're long asset A, short asset B, according to some hedge ratio. Imagine if you're short asset B and then asset B has some earnings announcement and it gaps up against you. So the TradFi book I've been building out such that it flattens at the close. I don't want to take risk on overnight. And also, I don't want to take risk on over the weekend. So the TradFi book is only going to trade during normal market hours. But yeah, man, it's
I mean, these
yeah.
tokenized stocks and things like that, they're going to trade, some of them, what was it? They said it was 24/5, so like basically Monday through Friday, 24 hours a day
I
is,
can't wait for that.
yeah.
Yeah, that would be awesome. And look, I mean, this stuff does technically trade 24/7, 365 on Hyperliquid. I mean, technically, but like the liquidity really isn't there to move these things. Like, I would much rather trade it only during regular market hours rather than like take the risk of having some big move against me.
I would think that, and I'm just guessing here. Don't quote me on this. I would guess, just thinking about it, that if you bought them in the off hours, like on the weekends or holidays or whatever, you could get exposure to it, but it wouldn't settle. Like the markets would need to be open for it to settle, maybe. Until they go
Yeah.
full, until full tokenization occurs, to where all of the assets are just tokenized, that they're not backed by a stock and they're a representation of, when it's actual ownership. By owning the tokenized RWA, you actually own the stock, which is maybe how it's how a lot of these are going to be. But my understanding right now is, like this article just talked about, that these tokenized stocks have to be backed by the actual stock. Until that backing isn't necessary, I just don't see the tokenized one as being actual ownership. It's just a representation of. It's an IOU.
I think it depends on the version, like the type
Yeah.
that you own.
Yeah.
But yeah, I mean, because they're not made equal. These tokenized equities, tokenized RWAs, they're not the same. You've got different issuers in different jurisdictions complying with different laws, with different, holding companies behind them. Like if you own like tokenized Tesla stock on, Solana, through some issuer there, that's likely going to be completely different than tokenized Tesla stock on like Robinhood chain or something. So yeah, you got to really know what you own, because these things are not equal. So
No, and then the kind of the last thing on this Coinbase story is that it looks like every transfer is subject to continuous sanctions screening, to be expected. I mean, if you're trading assets and TradFi with banks and institutions and governments, it's going to have all the KYC and AML and all of that stuff. And then it looks like Coinbase said, adding that holdings can be frozen and seized at the wallet level. So unfortunately, when you use anything centralized, that's why we're so bullish on decentralized stuff here. If you want to participate in traditional finance and a lot of this stuff, it's just unfortunately what you're going to have to deal with. But it's why you want to maybe de-risk a bit into decentralized assets like Bitcoin, and there's other projects out there that have tokens and coins that are more decentralized, to where you can store
Monero,
value. Yeah,
Bitcoin, yeah.
yeah, where you can store value and self custody. not be, not have it to where somebody can freeze your assets or claw back your assets, things like that.
I think that there's like only three. I think it's Bitcoin on the layer one. If you hold Bitcoin on like a node on Lightning Network, I think that can be messed with too. But Bitcoin on the layer one,
definitely wrapped versions.
Yeah, so definitely not the wrapped version. So you want Bitcoin on layer one. I think that ETH on the layer one can't be frozen, seized, nothing. And I think it's Monero too. But, just off the top of my head, Mike, I think that those are the only three. I think that just about everything else can either be frozen or seized or censored. But you can't censor a private key on the Bitcoin layer one. I'm pretty sure that you can't censor, freeze, or seize ETH on the layer one. On the layer twos, it's a completely different story. And then Monero, the whole point of Monero is that it can't be frozen, censored, or seized. So I think it's just those three. Like if you're looking for sovereignty, that's basically kind of what you're stuck with is Bitcoin, ETH, and Monero. I don't know about Solana. I think Solana can be seized or frozen, but I'm not sure. I'm not sure about that.
Yeah.
But I would guess that because it's more centralized, it could be, but I'm not sure.
Awesome. Well, let's go over this one, and then I want to kick it over to you to do about 10 or 15 minutes of charts, and in TA before we get into the deep dives.
Sweet, let's run it.
So this one here, Canton Network leads all blockchains in 30-day fee generation. Canton Network leads all blockchains in 30-day fee generation at $53.35 million in fees. So what's important about this is the fees that Canton Network generates. 100% of them is used to programmatically buy back and burn the Canton token. That is what hopefully at some point is going to result in the burn mint ratio of this token flipping deflationary. So something to keep in mind. So it says that it's first among all blockchains globally, ahead of Hyperliquid and Tron. So figures cover all fee types burned on Canton, including traffic purchases, pre-approval burns, setup burns, dust expiry, holding fees, and sender change fees. Under Canton's model, every fee collected is burned in full, with no protocol layer retaining a share. Over the past 7 days, Canton generated 10.35 million in fees, with 1.46 million recorded in the most recent 24-hour period. The ranking places Canton ahead of every other blockchain protocol across both the traditional crypto and institutional DeFi landscape, including Ethereum and Solana, neither of which appeared in the top tier. Hold on one second. Got some feedback on your mic, sorry. Let's see. So Canton fee actively continues to accelerate as institutional development scales. The DTCC's tokenization service went live with limited production trades on July 15th, running on both Canton and Hyperledger ahead of an October 2026 full launch. NASDAQ Calypso platform piloted tokenized margin and collateral workflows on Canton in 2025, and JP Morgan Connexus is integrating JPM coin onto Canton in phases through 2026. So this is the real adoption. There we go. I can just mute you. This is the full adoption that we're talking about of these banks and institutions. This isn't rumors. This isn't, hypothetical secret NDAs. This is actual real adoption and institutions and banks going live. This is actual fees and revenue being generated, that 100% of which goes to buy back and burn the token. This is why we're bullish on Canton. I mean, when it comes to the trifecta, Canton is probably one of the biggest, if not the biggest, that meets that criteria. So again, not saying go out and buy Canton, just saying that this is what you want to look for in a project. if you're thinking about investing in it for the long term. You want to see adoption. You want to see fees and revenue being generated. And you want to see a mechanism, either a burn mint mechanism or something that allows that those fees and revenue to accrue to you, the token holder. So, David, you there? You want to got everything?
Yeah, I'm just changing up my mic. I wanted to move, I guess, the direction of it so that it's not picking up my headset here.
Yeah, there was just like a humming that I was trying to read. It was like resonating. So
gotcha.
Yeah, let's go ahead and jump on over. If you want to share your screen, let's have you do some TA for the next 15 minutes or so and into the deep dives.
All righty, man. Let's check this out. Here we go. I'm going to go ahead and share my screen. And Mike, if you want to just bring it up to the stage, then we can run through. We can run through some technical analysis here. Okay. Let's start off with BTC. And I mean, Bitcoin bear market should be ending, around October timeframe, beginning of Q4. That's when we should expect the Bitcoin bear market to end here. Now, it's got this level of support. If I just zoom in, this is a daily. If we just zoom in here, we got CPI came in line this morning. Bitcoin initially rallied, but it's got this level of resistance above. And, if I just bring this on down like so, it's getting pretty close to, a level of support down below. We've got resistance above, support down below. So that level of support down below comes in at 62.5. Let's call it 62,500. So 1,000 points lower on Bitcoin is an important level of support that needs to hold. So, I'm watching this here, and if that level of support doesn't hold, well, then we're going to start talking about 58K again. So Bitcoin is getting very, very close to the end of its bear market. If we take a look at Ethereum also rallied on the back of that CPI earlier this morning, but was unable to push up above this little, these levels at 1940 or so. 1940 is the level of resistance above. It's basically got like this zone up above, something up here. That's like a level of resistance above for ETH. And, ETH has just been, it's rallied off of those $1,500 lows all the way up to, its high in the middle or end of July was, just below 2,000, unable to really push above to 2,000. And so far, unable to even get close to its 200-day moving average. But one thing about ETH that's starting to look pretty good is, look, ETH is, it's getting pretty darn close to breaking out in Bitcoin terms. So, either we see like imminent rejection on, Ethereum in Bitcoin terms, or, either this rejects and we see ETH in Bitcoin terms break down below 0.029, or if this breaks out, then this to me would signal, actually like a sharp move to the upside for all digital assets, not just Ethereum, but I think, Bitcoin too. So, maybe there's room for Bitcoin to break out above this level of resistance here and push up towards its 200-day moving average around 70K before eventually rolling back over. Not quite sure. Look, no one's got a crystal ball. Why don't we take a look and see what Bitcoin did last cycle around this same period in time? It's the same type of seasonality here. So last bear cycle for Bitcoin, the 200-day moving average was all the way up here. So this is the August timeframe. If I go ahead and grab that arrow. So here's the August timeframe. This is where we are now, but last cycle. And last cycle, Bitcoin during the bear market, its level of trendline resistance was quite a bit higher. So its trendline resistance was quite a bit higher, and the 200-day moving average was also quite a bit higher. So Bitcoin was not as close to trendline resistance, nor was it as close to 200-day moving average resistance. So this bear cycle for Bitcoin has been characterized by lower levels of BTC vol. So volatility for Bitcoin has been much lower this bear market. And I think that that's a direct result of those Bitcoin ETF products. So last last bear cycle, Bitcoin did manage to put in a series of higher highs as it flagged off. And then eventually we got like a little bit of a move down into the September timeframe. There was some weakness here. And then that FTX crash low was put in November. So we did get the low for BTC in Q4 last bear cycle. So I'm expecting the same exact thing to happen again. Yeah, I mean, there's really, in my opinion, no reason to expect this time to be any different. The only thing that I might see here is because we've got lower vol, I don't think that the drawdown is as sharp. And you know what else I see here, Mike? If I go ahead and just remove these levels here, I actually see Bitcoin likes to put in inverse head and shoulders patterns. It really does. So I see a potential inverse head and shoulders pattern forming here. If this moves just a little bit lower into the start of Q4 and we get, maybe the bottom's already in. If there's not like a moment where the bottom falls out for Bitcoin and the low here at 57, 58K, that's the low for Bitcoin this bear cycle, then you got your left shoulder, your head, and maybe, and I'm just speculating here, maybe we get the right shoulder here and then up into the races. So yeah, look, I'm a Bitcoin bull. I would love to see Bitcoin, have already put in its bear market trough and start to rally here a little bit. 200-day moving average comes in around 70K. I want to take a look at Tron too, because Tron's definitely on my shopping list simply because, dude, this thing has performed so well since 2020. Here's the 2020 low all the way down here. It's put in like from trough to peak like a 50 bagger, and it's held on to the vast majority of the gains. So Tron remains on my shopping list, holding on to that 200-day moving average also. Solana, SOL. Solana has a 200-day moving average up here at like 82.5, 82.50 or so. So, what I would like to see for Solana is that it holds this level of trend line support as we zoom in. I would really like to see Sol hold on to this level of trend line support and not break down. So if Bitcoin's final move to the downside, if it comes, is shallow, and we don't see like a big move lower out of Bitcoin, well then probably we don't see a big huge move lower out of Solana either. So if this is able to hold and the bottom's already in for Sol, then hey, you know what? Maybe you watch that 200-day moving average as resistance above, get above that 200-day moving average and close above it on a weekly candle. Then I think Sol could start to run to start the next bull, but it's still a little bit too early. Here's Canton. So, Canton, big sell-off out of Canton over the last couple of months here. It's got resistance up here in this zone between 15 cents and 16 cents, something like that. So really looking forward to seeing Canton rip to the upside above this level of resistance. But I think, Mike, we might need to see those CIPs pass before this is able to really take off. If we take a look at Monero, Monero has this really nasty looking, head and shoulders pattern here. Left shoulder, head, right shoulder, and here's the neckline. And then here's horizontal support down here, trading above that 200-day moving average, though. Most other digital assets are not trading above their 200-day moving averages. So it's nice to see Monero actually trading above its 200-day. If we take a look at Bittensor TAO, this is a chain, an asset that we're going to be taking a look at during the deep dive period of today's show in a couple of minutes. If we take a look at Bittensor TAO here, it's got solid support in this. I'm going to draw this in as more of a zone, more of like a region of support. So if you see this, let me just go ahead and make this a little bit easier for us all to see here. So this looks to me like a region of support between like 140 and 170. So this is like a really nice zone of support for Bittensor TAO. And we're going to learn more about the upgraded tokenomics of Bittensor TAO in a couple of minutes here today. Okay, here is SPX 6900. This thing, man. So look, I needed to throw at least one meme coin on my shopping list here, and it's trading just barely below its 200-day moving average. So if this is able to, rip above its 200-day, I mean, look, this has a phenomenal community behind it. So maybe this one puts in some multiples. Let's take a look at some TradFi stuff. S&P, I mean, look, this is starting to look like a flag, so painting, here's the poll, painting the flag. If this breaks out, 8,200 could be a nice target on the S&P. The NASDAQ doing something similar, poll, painting a flag, watch for a breakout to fresh all-time highs out of the NASDAQ. The Russell, actually, within a stone's throw of printing some fresh all-time highs is the Russell. Now, why? Why are these indices getting so close to just, printing fresh all-time highs? Well, because we actually got the CPI earlier today, and on the back of that CPI print, which came in line, Fed rate hike expectations just fell off a cliff. So went from 50% to 38%. And so if we see rate hike expectations continue to decline into the next FOMC meeting, which is in just about a month's time, then that just gives equities, risk on assets, a reason to rally. And hey, lower rates, into 2027, that would mean, higher equity prices. You take a look at something like the 10-year, and yields on the 10-year have not broken out, like not yet anyway. So a lot of people are calling for yields to break out, but that hasn't happened yet. You take a look at crude oil. This could be a reason why rates haven't really broken out. The rally so far off the 200-day moving average for crude has been pretty weak. So, rallying from $76 up to $84, $85, the gap fill is up there at 89. If crude doesn't break out up to that gap, then, maybe rates pull back just a little bit. Take a look at gold, sitting just below its 200-day moving average at $4,500. If gold breaks out above that 200-day moving average, then I would look for 4,900 to be the next level of resistance. Silver, its 200-day moving average is at 71 or so, breaks above 71, and watch for $89 again for silver. Oh my goodness. And the dollar is, of course, something that we all need to be watching. So I'm going to go ahead and remove these drawn objects for DXY. The dollar has like this level of resistance here. Notice how many times this has been either support. It's really been resistance multiple times. Once in May of 2025, another time in July of 2025, and then in November of 25, twice. And then here in March of this year, March and April of this year, we had one more time in June of this year, and then the breakout falling back down below it. So let's see if this zone between 100 and 170 or so, 100.70, let's see if this acts as resistance again for the dollar. Now, it would likely act as resistance for the dollar if yields fall a little bit. So why would yields fall? Well, I mean, you got to track what's going on in Japan. If the Japanese rates continue to push higher, then I would expect U.S. rates would also, especially if crude oil pushes a little bit higher. So you got to watch what's going on overseas. You got to watch crude, and you got to watch rates. For all of our XRP maxis out there, I just want to go ahead and show what's going on with XRP. Since it broke down below $1 yesterday, that means that, hey, you know what? This downtrend is intact. It was unable to hold that $1 support. So I think that XRP has solid support down here at 75 cents, which is the double top from back in 2023 and spring 2024. So you see that double top right there? When it broke out, that flipped from resistance to support. So that level, 75 cents, is now solid support for XRP all the way down there at 75 cents. So yeah, we got some big movers here today in TradFi though. SpaceX plus 8.3%. My goodness, this thing trades like a meme coin, but it's a multi-trillion dollar stock. So, I mean, you know, after the IPO, you got massive swings out of this thing. What else is moving and shaking today? Oracle, plus 4.6%. Big level of support here at, 120 or so? Oracle actually held on to that level of support, put in a big V-shaped bounce. This thing is, again, another massive equity item that trades almost like a meme. So, you know, this the entire AI trade, I think, is on some shaky foundations because OpenAI and Anthropic, they are massive, revenue. They don't make any money, man. Like, and they burn free cash flow. They don't actually make any money. So yeah, the AI trade, not something that I'm super bullish on in the near term. You take a look at Micron, one of the semis, a big semiconductor, and this pattern, you see this pattern all over the place with the semis. The same type of, parabola on the way up, painting what looks like, could be construed as a flag. If we zoom in to, or zoom out to a weekly, you could say that, oh, you know what? We painted a flag here and maybe this pushes higher. I don't know. It's kind of tough to be bullish on these semis when their margins are just so astronomically high. When you see margins like that, they tend to compress. And that means lower stock valuations. Take a look at SanDisk. It looks like the same exact pattern. The Western Digital, same pattern. Samsung, very similar pattern. And of course, the Kospi, which is just like levered semis, very similar type of pattern. And, I just can't be bullish on semis after long term anyway, after they've already printed, like 3 or 4 or 5 baggers or more just in like the last 24 months. So difficult for me to be bullish on the semis and very difficult for me to be bullish on the AI trade, given what I think are just, like bullshit accounting practices, man. So yeah, I mean, we've seen this movie before where, you've got this circular financing nonsense accounting practices, and I just don't see how it resolves in a positive way. So let's go ahead and shift gears. I want to bring things on over to our Intel library, and I want to go ahead and let's take a look at Bittensor TAO. So Mike, we're going to go ahead and take a look here at Bittensor TAO first. I'm going to change the tab that I'm sharing. So Bittensor TAO, interesting project, I think. I don't know enough about the tokenomics of this thing, though. So let's learn a little bit here about Bittensor TAO. And Mike, let me know if you can hear this.
By early 2026, the Bittensor protocol operates as a decentralized settlement layer, coordinating 129 distinct machine intelligence commodity markets. This network capacity expanded dramatically from early 2025, driven by protocol upgrades designed to support a maximum concurrent capacity of 256 subnets. These subnets facilitate continuous competitions for large language model inference, AI fine-tuning, protein folding, and zero-knowledge compute verification. The catalyst driving this expansion was the deployment of dynamic TAO, or DTAO. It eliminated centralized governance and restructured how the protocol allocates block rewards. Concurrently, the deployment of an Ethereum virtual machine execution layer onto Subtensor allowed decentralized finance primitives, like liquid staking and automated index funds, to natively interface with the TAO ecosystem. By early 2026, the aggregate market cap of subnet alpha tokens exceeded $1.1 billion, representing 27% of TAO's primary market cap. But against that valuation, top-tier compute subnets generate an aggregate of $20 million in annualized revenue to remain commercially viable. The success of the 2026 DTAO architecture hinges entirely on a mechanical race between this external enterprise revenue and internal network friction. To understand how this race resolves, we must build the 2026 economic model from bedrock subnets all the way up to real-world payment integrations. With DTAO fully operational, evaluating Bittensor requires abandoning artificial intelligence hype and focusing strictly on the mechanics of permissionless capital allocation. Before the 2026 upgrades, network emissions were dictated by centralized voting vectors controlled by the legacy root network. That was replaced by the TAO flow allocation mechanism, which strictly determines new network emissions by mapping the net capital staking flows across the entire network. Under DTAO, automated market maker liquidity pools act as decentralized bridges between the primary TAO token and individual subnet alpha tokens. Capital allocated by stakers into these AMM pools serves as the direct voting mechanism for distributing block rewards. Capital flow dictates emissions. Pure AMM governance exposes the network to short-term manipulation from large capital whales, flashing liquidity to temporarily capture emissions. To stabilize the model, the protocol passes this volatile capital flow data through exponential moving averages, smoothing the curve. This smoothing process filters out short-term noise, ensuring the network responds to genuine, shifting market demand for a subnet's utility, rather than speculative spikes. By removing human governance bottlenecks, this architecture forces subnets to compete directly for algorithmic capital inflows to survive. At the monetary layer, Bittensor mimics Bitcoin's programmatic supply schedule to enforce long-term asset scarcity. The foundational metrics are rigid: a 21 million maximum supply cap, a 12-second target block time, processing roughly 7,200 blocks daily. Unlike legacy blockchains where halvings are calculated by strict block height calendars, halving triggers rely entirely on cumulative issuance thresholds. The first halving event in mid-December 2025 activated exactly when total issuance reached the 10.5 million token midpoint. The immediate monetary impact cut global daily TAO issuance from 7,200 down to 3,600 tokens. Halving thresholds rely on unrecycled total token issuance. Recycled TAO, tokens paid for protocol actions, are returned to the unissued pool, not destroyed. Three vectors drive this: developers' subnet registration fees, miner neuron registration burns, and EVM smart contract gas fees. Consequently, during periods of intense competition and high on-chain utility, this accelerated recycling actively delays the calendar arrival of future halving milestones. Bittensor's scarcity is elastic. It algorithmically stretches the timeline to the 21 million cap in direct proportion to how much the network is actually utilized. At the application layer, top compute subnets can no longer survive solely on emissions. They must integrate enterprise payment gateways. Subnet 64, known as CHUTS, provides the premier example of operational scale in the post-halving environment. Operating as an on-demand serverless compute environment, CHUTS handles up to 160 billion inference tokens daily for massive multi-provider aggregators like OpenRouter. The X402 protocol standard enables non-crypto enterprise clients to pay for decentralized AI compute using stablecoins. Proxy nodes intercept these payments, automatically swap them for TAO on open markets, and inject the TAO into the subnet's native AMM liquidity pool. This automated pipeline creates a closed-loop revenue buyback mechanism. It systematically recirculates capital from traditional tech markets directly into the Bittensor ecosystem. Mastering this X402 integration is the only proven method for a subnet to sever its reliance on speculative staking emissions and establish genuine commercial sovereignty. Despite these revenue loops, two severe structural inefficiencies threaten the network's long-term value capture. This split-screen chart illustrates the first threat: the intense asymmetric dilution caused by the December 2025 global halving event. This dynamic places immense liquidity pressure on AMM pools. The individual alpha token supplies inflate aggressively, while the global TAO rewards entering those same pools are cut in half. The second, more insidious threat is governance centralization and the reality of validator rent extraction. Retail delegation inertia results in massive amounts of capital remaining stagnant in subnet 0, parked indefinitely with established institutional validation nodes. These institutional validators extract mandatory commission fees ranging from 8 to 18% on all delegated stake. These validator revenues accumulate regardless of subnet operational quality. This consolidates massive influence over UMA consensus evaluations and drains capital away from active utility development. This rent extraction acts as a constant, heavy friction against the network, demanding that commercial subnets work significantly harder just to break even. The DTAO architecture successfully mapped permissionless machine intelligence directly onto decentralized financial rails, but in doing so, it catalyzed an unforgiving, hyper-competitive economic reality. These competing forces guarantee the ecosystem will bifurcate into two distinctly separate tiers of subnets. The winning minority tier will consist of subnets generating tens of millions in annualized commercial revenue, capable of utilizing X402 buybacks to completely absorb post-halving dilution. The secondary tier will be defined by speculative subnets, doomed to suffer rapid capital flight, as stakers ruthlessly reallocate assets away from environments without real-world utility. Bittensor's ultimate survival in 2026 relies not on achieving general artificial intelligence, but on maintaining cold mechanical flows, proving that external enterprise demand can permanently outpace internal validator friction.
Okay, so what are some of the subnets on Bittensor TAO that are performing best? That's what I'm curious to learn about now. And I think that
We're really quick. I mean, because we've done a deep dive on TAO before and talked about that. The thing that I really would like to focus on is, what do you think of the changes to the tokenomics?
I mean, complex. That's what I think. Like, dude, like I really didn't understand Bittensor TAO when we first ran through it, and that's why I didn't buy it.
Yeah.
You know, and it seems like, okay, like it seems like this thing can just be changed on a whim, and you know, dude, it seems like the niche that it's in is likely to perform well, but fucking A, man, like if I can't easily understand the thing, then I can't buy it. I can't buy it.
And it's
You
not to
know?
say that it's a, a bad project at all,
No,
or
no, not
that
at all.
that it's not worth buying. It's just we like to be honest here, and I'll be honest, I didn't fucking understand it.
No, I mean, it kind of just like it lost me, man. It
Yeah.
lost me. Yeah.
So I mean, the best thing that I can say, because I mean, we've gone over TAO before, and I mean, we can definitely talk about the subnet some more here. But the big thing that I was hoping to get out of this was with the changes to the tokenomics. I was really hoping to get, and maybe I can rerun it and ask it to really dumb down the the tokenomics to where it's easier to understand, because that ultimately is what I was hoping to get from this, and I'm still walking away wanting.
Yeah, me too. And I hold an alpha token, Ditto, which is I think subnet 118. And like it's just so difficult to evaluate these things. So here I'm going to share this. This is TAO stats, and this is the token that I'm holding, the alpha token that I'm holding right now. And I've got like $50 of this thing. Okay, so like not a lot, but when I take a look at these different subnets here, it's just so darn difficult to get a window into what this actually does. So you got shoots subnet 64, and I took a look at this. I've taken a look at subnet 64 a couple of times. This is one of the largest subnets. And the thing for me about shoots is that, based on what I know of it, it seems like unless you really need data privacy for your AI inference, that it's not actually cheaper than running inference, using AWS or Google Cloud or something like that. So I don't know. And also, it seems like pretty convoluted to be able to use it compared to just, using a centralized service like Amazon or Google. So, yeah. And, so what is, Scotty D, what's one of the subnets that you think is likely to perform best? Because my understanding of these things is that they're basically like businesses. But these are businesses that you stake your TAO to receive the subnet token, which is kind of like, shares in that business. But it looks like these things are inflationary. So, I just, I still don't understand Bittensor TAO well enough. I still don't. And I can't buy something if I don't understand it. So yeah, so Scotty D's saying that Liam and Targon are similar to shoots, but doing the best. Okay, I mean, no, man. Let's take a look at Liam. So this is number 2, subnet ranked number 2, and we're going to go ahead and zoom out here to a weekly. And I mean, like, this is the weekly chart here. So, I mean, dude, this doesn't look great, but it has swung to the upside. You got to break out above 2 levels of resistance here. So this is definitely picking up some steam.
Well, he
It's
does
just
say that it generates 10 million in revenue a year, and all revenue goes to buybacks. So that's bullish.
right. But what is, how are these alpha tokens minted? Because if there's $10 million a year in revenue, but it's minting $20 million a year in tokens, then, so
Well, I mean,
the
I'd be interested to know more about how it's being used, and because the same thing can be said for Canton. I mean, let's be real. The same thing can be said for Canton, where I'm very bullish on it because of all the adoption and stuff like. Because if it just had the burn mint mechanism, and it was at 0.7, but there was no adoption, but it was somehow generating a bunch of fees, I'd be kind of curious on what was behind it all. So, I mean, it's definitely, we would have to do a deep dive into this subnet to fully understand it. But I mean, if it genuinely is generating 10 million in fees, I mean, if Scotty, do you know how much? All alpha tokens have their own hard cap of 21 million.
So I think that's the maximum supply of all of the alpha tokens is 21 million.
All right.
And it's not like there are stable coins over here either, right? So, if you're, first of all, you got to, bridge on over to a Bittensor TAO, that network. And then once you've got the TAO coin, then you've got to stake it to receive the alpha token. And then once you have the alpha token, you can't do anything with it. You just hold it, So you're basically like investing in the Bittensor TAO network and then investing your TAO, well, staking your TAO, but basically investing your TAO in the business, whatever that subnet is. They're kind of like businesses, I believe. And, there's been a bunch of shenanigans with these subnets. So, I mean,
shenanigans, you say?
Yeah, there's been some shenanigans. So,
would you say chicanery?
Yes, chicanery. Shenanigans. Stuff that's not necessarily good. So, I don't know. Like, I like the idea of Bittensor TAO, but dude, I still don't understand this thing. So, yeah, I'm gonna pass. For now, anyway. I need to do more research on it for myself.
Yeah.
Let's take a look at Optimism. So, people were talking about the Superchain and Optimism, and I don't know, man, that OP token, though, let's just check out that OP token real quick. And just before we get started taking a look at that deep dive research. So here's the OP token. This has the pattern of something that, is dying. So yeah, not good. If we grab a level of support, you see the breakdown. So yeah, this doesn't look good at all. But let's go ahead and let's learn more about Optimism and the Superchain.
By mid-2026, the Layer 2 ecosystem on Ethereum is characterized by intense competition and modular fragmentation. Network operators are fighting for block space dominance. Optimism positioned its open-source OP stack as the foundational framework for this multi-chain environment. They succeeded in attracting institutional giants, securing custom deployments from Uniswap's Unichain, Sony's Soneum, and Coinbase's Base Network. This institutional adoption translated directly into real-world utility. By July 2026, Optimism captured 29% of the $758.8 billion global crypto payment card settlement volume, cementing its position as a dominant execution layer for consumer finance. This split-screen data visualization highlights a severe disconnect. On the left, we see climbing metrics, Optimism's 29% payment card market share, alongside Base generating 71% of total ecosystem sequencer revenue. On the right, a plummeting bar chart tracks Optimism's historic token buyback program, abruptly paused and reduced to zero by May 2026. The halt was triggered by an 87% collapse in buyback volume between March and April, dropping to just 50.2 ETH. The OP token's inability to capture value stems from a structural flaw in Layer 2 economic architecture, which leaves the protocol caught between high-velocity inflation and asymmetric corporate extraction. Historically, OP functioned strictly as a governance token. In January 2026, the Optimism Collective attempted to fix the disconnect between the protocol's growth and the asset's price by pivoting to a cash flow-aligned mechanism. Under this pilot program, 50% of net Superchain sequencer revenue was allocated to monthly, slippage-protected over-the-counter purchases of the OP token. This balance scale visualization illustrates the initial execution data. In the first quarter of 2026, the program successfully deployed 513.9 ETH to absorb 9.45 million OP tokens from the open market, placing them on the left platform. The mechanism faced an immediate systemic headwind, a low circulating float, and an aggressive unlock schedule. Between August 2026 and April 2027, 343 million OP tokens are scheduled to enter circulation. The impact is severe. Q1 buybacks neutralized less than 4.4% of incoming emissions. Furthermore, the repurchase tokens were not permanently burned. The assets were routed directly back into the Optimism Collective treasury. Putting L2 sequencer revenue against venture inflation schedules turns the buyback into a treasury recapitalization tool rather than a yield-bearing mechanism for retail investors. The buyback program required incoming sequencer fees to operate. By April 2026, those fee inflows degraded rapidly. Coinbase's base network operated as the monopsonistic engine of the Superchain. Throughout 2025, Base alone was responsible for approximately 71% of all ecosystem sequencer fees. This mathematical flowchart displays the standard OP stack rent formula, designed to distribute economic activity back to the collective treasury. Participating chains pay either 15% of their net profit or 2.5% of their gross chain revenue, whichever is lower. The formula assumed dozens of equal networks without one dominant entity. Base's $74 million gross revenue and high margins defaulted the path to the 2.5% cap. Applying the formula, Coinbase routed 1.85 million to Optimism, retaining 72.15 million in surplus. To secure this partnership, Optimism previously granted Coinbase 118 million OP tokens. Corporate disclosures reveal Coinbase maintained a passive governance posture, meaning the Superchain's primary economic engine operated entirely outside the political control of the OP token house. The standardized rent formulas created a structural extraction asymmetry. A single corporate entity legally captured 28 times more economic value from the network than it remitted to the protocol, bearing the infrastructure costs. The OP stack is distributed under a permissive MIT open source software license. Chain operators face zero technical or contractual vendor lock-in, preventing them from modifying their software or altering their fee-sharing relationships. In February 2026, Coinbase utilized this exact optionality, strategically decoupling Base from the core OP stack ecosystem framework. Superchain fee remittances degraded immediately, choking off the primary capital source for the token buyback program. The secondary financial effects hit the protocol simultaneously. Spot prices for OP plummeted 23% in the following days, and the Optimism Foundation implemented spending cuts that reduced its core staffing headcount by over 20%. This highlights the core paradox of modular Layer 2 design. Open source flexibility drives enterprise adoption, while simultaneously stripping the native token of any enforceable value capture. If enterprise revenue evaporated, the logical fallback should have been Optimism's massive crypto payment card dominance. In July 2026, Optimism processed 9 million individual card transactions, almost entirely dominated by USDC and USDT stablecoin settlements. The mathematical reality: protocol margin equals gross sequencer fees minus Layer 1 data availability costs. Issuers favor Optimism's sub-cent blob space, yielding a median fee of roughly 0.00001. The final output from millions of purchases aggregates into a microscopically thin sliver of margin. Optimizing a Layer 2 for high-frequency
Can you
consumer
pause that real quick?
creates a fatal low-margin trap. The
This honestly, not exact apple to apples, but a lot of this has a lot of the same issues as XRP, where you have a very successful, or successful chain that's seeing some adoption, that's, generating fees that don't go to token holders. It goes to the organization, and it has, and I mean, the fee structure for using the network is, that 0.00001. There's a lot, I'm seeing a lot of parallels, I'll say. And this just, I mean, is as cool as the tech might be, and as much as Coinbase appears to be using it, because it's like, what is it said, 71% of the network usage is Coinbase, because Velodrome, I know, used, the OP stack, quite heavily. And I do believe, unless they changed it, the new Aerodrome is supposed to. So I'm not, so far, I'm not seeing a bullish thesis, or, a bullish case for me buying the OP token.
Me neither. I agree with you 100%. And, although I didn't want to say it, Aerodrome merging with Velodrome, like, dude, Velodrome sucks. Like, so
Well, it's not that the platform necessarily sucked. It's just, for whatever reason, it didn't get the traction that Aerodrome did. And I mean, they're built by the same people. It's a lot of the same functionality. To be 100% honest, Velodrome was multi-chain. Aerodrome was only on base initially. They're changing that now. But if you really want to be real about it, Velodrome was kind of a better platform in a lot of ways than Aerodrome was, but for whatever reason, Aerodrome got more traction.
Coinbase routing users. That's the only reason, I think.
Yeah, but I mean, but that just goes to show you, how important adoption is.
Yeah, adoption is super important. And let's see, we've only got a couple minutes left on this, so let's just see what else it has to say. But so far, not so good.
Volume drives adoption narratives, but mathematically starves the tokenomics mechanisms required to accrue value to holders. This tri-panel matrix summarizes the 3 interconnected vulnerabilities that paralyzed the 2026 Optimism ecosystem: a net supply delta expanding by hundreds of millions of tokens, the asymmetric renegotiation risk of a dominant corporate counterparty, and the low margin generation of consumer blob space. The mid-2026 crisis proves that providing highly efficient, globally adopted block space is an entirely different business model than accruing financial value to a protocol token. Fixing the economic architecture requires specific structural reforms. The protocol would need to enforce mandatory economic lock-ins, raise minimum rent percentages, or implement programmatic token burning. Unless the Superchain architecture is rewritten to include mandatory value capture, the OP token functions as a capital allocation instrument for the foundation, rather than a yield-bearing equity proxy for the secondary market.
What's the point then? What's the point of it? This is the same problem that ARB has. Well, not the same, but like kind of sort of similar, where it's like, what's the point of the token? Like, why? So the OP token, like, no wonder it's been down only since like spring of 2024. Mm-hmm. And so, Crypto Stevo is saying that I don't think Aerodrome got lucky. They had a lot of great liquidity pools, weren't going to earn high yield relatively safely.
But that's what I'm talking about, is that, it's, why didn't Velodrome, have, really great liquidity pools to where, it was it was multi-chain. So, I mean, they had access to a lot more, liquidity, because, all Aerodrome had was the liquidity on base. You had to bridge over to base, whereas Velodrome was multi-chain. It had ETH, it had base, it had, like, I think it was 10 different chains or something like that. So it's just, one got traction. And I think a lot of it probably had to do with what David was talking about, that just Coinbase kind of, pushed that platform more. So I'm very bullish on Aerodrome. Don't get me wrong. It's my largest holding, but I got to call it like I see it.
So I wonder if Velodrome makes money. Nope. Nope.
David, I wonder if nope.
That sucks. Dude, like it's just so hard for me to like get excited about these things when they just fucking they're losing money operations. It's like I don't want to burn money, you know? Like why can't they make money? Like it's almost like they forgot. Like, isn't that like one of the things that you do when you go into business? Like you're supposed to try to make money.
That's our trifecta. You know, I cannot in good conscience, other than, very clearly stating it's a speculative play. I cannot in good conscience say that I am actually investing in something unless the company has, real adoption, real customers, they generate enough revenue that it pays for their operating costs and they don't have to dump the token on me to run it so that their company can stay afloat. And I want that their fees and revenue, that some of that revenue somehow accrues back to me. If I'm giving them liquidity to build out a product and service, I want something back for that. I mean, is that, are we like crazy for, thinking that way?
No, not at all. And, Mike, the more that we go through these pieces of deep dive research, the more that I'm really starting to learn that, dude, like 99.9% of crypto is just vapor garbage. Like, maybe the protocols do some cool stuff, but do they make money though? Like, it seems like most of them just simply don't. That the vast majority of these things are just like, like some type of fugazi for maybe founders to exit. I can't quite tell, but most of them don't make any money. And then even the ones that do, like, dude, the best example of this is Pump.fun. Like this thing, if we take a look at Pump.fun, dude, like this thing makes buku money. Like, look at this. This is crazy talk, man. This is crazy town. These guys make a shit ton of money. They're making like $7 million a week. And yet the vast majority of that does not go back to the Pump token. So that value accrual mechanism for the Pump token is completely broken. So like even when the protocol makes a ton of money, you're not likely to see that as the token holder. So that's why Hyperliquid is so unique, because at least Hyperliquid, like they make a ton of money and they return those revenues to token holders. Like that is, I mean, you take a look at Hyperliquid, that's amazing, because the vast majority of crypto protocols just don't do that. So let's see. So Crypto Steve-O is saying that, he begs to differ. So why don't we take a look at that Pump token? Let's see what's been going on with Pump USDT. Here it is. So okay, get a nice bear market rally. Nice, man. So awesome. If you've if you bought this thing, prior to the beginning of this year, well, then you're not doing too well. But if you bought it basically at any point this year, then you've made some money. So great. Seems like the rally might be stalling out a little bit though. Yeah, I'm just not bullish on Pump.fun because I'm not really bullish on meme coins in general. I mean, look, you guys, they're obviously a casino. It's obviously mostly a scam. So just you got to be careful with the meme coins. But I mean, you talk about the trifecta. Hyperliquid meets our trifecta in spades. Real users that drive real revenues that actually return to token holders. Who would have thunk it? That's a pretty solid trifecta right there, man. You take a look at that hype token, and if we just take a look at this, it definitely did hold support, or at least so far, it's holding support. So that's good. And then it's got resistance up above at those old all-time highs at, what is that, like 77? So get above 77, man. And this thing could do really, really well, but it's still positively correlated with Bitcoin. So if Bitcoin has a final move lower this bear market, then I think hype probably does too. But this is probably one of the best tokens when it comes to the trifecta. What else? What else actually satisfies the trifecta? Well, Canton does. The only problem is that Canton is still inflationary. So if we take a look at Canton scan and we just check out the statistics here, let's see, where is that BME? It's sitting right now today at 0.5774. So that's not good.
No, quite a dip.
Yeah, so not good at all, man. So that probably explains why that CIP is getting proposed to, bring those, all that volume from the repos, to start burning CC. That would be like necessary at this point.
So Steve-O's asking what tokens do we see as the top three when it best when it comes to the trifecta?
I mean, okay, well, it's users that drive revenues that accrue to token holders. That's it. So hype, Canton, Tron, like those three.
You stole my answer, so yeah.
I mean, look, you might not like those three because the trifecta doesn't necessarily mean token price go up.
No,
like okay, because you look at Canton, dude, it meets the trifecta, but it's still inflationary as hell. So like that means token price number go down. You look at something like Tron, and yeah, it meets the trifecta, but like it's got a super scammy founder, man. Like, like scammy McScammertons over there, dude, like super scammy.
Yeah.
And it's Chinese too, which is like not good. So like, okay, like those things to me anyway are not good. Like scammy Chinese dude starts a blockchain and like you're supposed to trust that shit. Like, okay. But $90 billion of USDT lives there. So
massive amount of TVL.
And Link does not meet the trifecta. No. Not even close.
No, Link is terrible when it comes to the trifecta. There's plenty of adoption. They're making plenty of money, but there is literally no connection, other than, speculative buying of the token. There's no connection between the fees and revenue that, that the company is generating for their, products and services and us, the token holders.
Right. And, I'm taking a look at Link right now, Mike, and, here's the Link chart. I mean, it's got support at $5 or so, solid support down there at $5. It's currently trading for $8.77. So like, I mean, you just don't need it. That's the thing. Like Chain Link is a great business and oracles are needed, right? But do you need the Link token to use Chainlink's services? I don't think so, right?
No, I mean, and again, it's a lot of this that we point out about a lot of these projects is true of like 90 to 90%, 95% or more of the crypto projects out there. A lot of these projects create a token to generate liquidity to bootstrap their business. It's kind of a roundabout way of coming up with investors, investment. But the thing is that you're not really an investor because it's not a security and you have no contract with them to where they're going to pay you back. It's basically a trust me, bro. You're hoping that somebody else is going to come along. I mean, it's the classic Ponzi. You're hoping that somebody else is going to come along and buy the token that you bought at a lower price for a higher price. That's really all it is.
So I see what Crypto Steve is saying in the chat that according to Sergey, yes, you do. You can pay in fiat to use Chainlink's Oracle services, then it gets exchanged to Link. So hey, man, if that's true, maybe we need to update our deep dive research. Let me take a look here. So here's DeFi Llama. Here's Chainlink.
Even if that's true, that doesn't mean that value accrues to the token.
That's true. And look, it looks like they're making money, and it says token holder net income. Okay, great. So I got to go back on over to our Intel library, and let's just take a look at this. Let me see what we have for Chainlink. So Chainlink is in here somewhere. There it is, Chainlink. And let's just check this out. Okay, so the Chainlink environment, executive summary, technical infrastructure. Let me just zoom in here so we can all see this a little bit. Okay, so what I'm looking for here, the earnings numbers do look really good, Crypto Stevo. And what I'm looking for here is, evidence of value accrual to Link token holders, to the Link token. Okay, so economics 2.0, circulating supply. Here we go, getting closer. Okay, annualized fee revenue, $75 million. Annualized token emissions, $540 million. Okay, so Link has a hard cap of 1 billion tokens. As of early 2026, approximately 730 million tokens are in circulation. The network executes quarterly unlocks of 10 to 20 million tokens to support operations and staking. So it sounds like it's still super inflationary, and that could explain, number go down for the Link coin, Link token. So it says revenue to emission ratio is 13%. So that's not good. And the sustainability goal to achieve net neutral or deflationary dynamics, the network must fill an 86% deficit by expanding enterprise service fees.
Damn.
Okay, so yeah, see, but it's got the same type of problem that Canton does, right? Where, okay, yeah, it looks like the tokenomics could be good, but as long as it remains super inflationary, it won't help you as a token holder. That kind of sucks. But I guess if you've got a long-term vision for Chainlink and you're willing to hold it and you can withstand the pain of drawdowns, then maybe. Not for me. It's not for me.
There's a lot of speculation in there.
Yeah.
I mean,
there is.
And really, what it all boils down to is you really need to decide what it is that, your investment thesis, for us, and we're not saying it's perfect, is the trifecta. If, for you, you might want to go higher up the risk profile to where, you're looking for that 100x or 1000x, and you're willing to, put a lot more weight into speculation. Chainlink, it is, speculative, but there is a ton of adoption. And if, it looks like Crypto Stevo said that he thinks that they voted for a new burning mechanism this year, and if that's true, and you bought, Chainlink at, $8, or if it goes down to $5, and that turns things around, for the token, and token goes up, a little added speculation could pay off for you. You just need to decide how much risk that you're willing to take with your liquidity. And that's why I have my plays, that are more along the lines of the trifecta, that are more valued the way that traditional businesses are valued. And then I have my speculative plays, Aerodrome. It has, what I feel is really good tokenomics and stuff like that. Not perfect, but good. It has great adoption. It generates good revenue and fees, and but Chainlink, the business itself has great adoption and it makes a lot of money. But there's a lot of speculation on if potentially, maybe they're going to fix the tokenomics on it so that you, the token holder, benefit. Same thing with XRP, Ripple. They're buying up companies. They're doing all this cool, sexy stuff. But the way the tokenomics currently are, the XRP token, other than being a very cheap gas token, has very niche use cases as a bridge asset. And there's a lot of projects and a lot of ways that they've solved for that, to where it's not something that banks and institutions are going to want to adopt. They're not going to use XRP as a bridge asset when there's plenty of options out there to use stable coins and atomic settlement.
So, Mike, as you were speaking there, I was just thinking to myself, like, okay, I want to take a look at the deep dive research that we've got on Bitcoin in the Intel library, because, the more that you were talking, the more I was thinking to myself, like, maybe I don't want to buy any of these altcoins, like at all. Because like, dude, most of them are just garbage.
Are we funding ourselves out of altcoins?
Like, dude, I'm getting close. Like, I need to fix the search in here, dude. The search in the Intel library fucking sucks. How do I find Bitcoin? There it is. Okay. So Bitcoin, we gave it a grade of B. You know what, dude? We gotta give this a grade of A. It's the only one. I don't know, but yeah, no, I hear you. It is a B. It is a B.
It's good, but it honestly, all it would take is for there to be an exodus of miners, and there already kind of, to an extent, has been, because it's more profitable for a lot of them to do data for AI. And if enough people just decided, you know what, this doesn't have value. If a bunch of the big holders and stuff like that, if everybody just started offloading it, potentially, not saying it's going to happen, but it's just there. If you really are honest about it and you look at Bitcoin, the only thing that gives it value, it's like fiat. The only thing that gives it value is perceived value. And for that matter, a lot of things, gold, silver, it's a bottle of water. If you're trying to get, if there's a guy sitting by a pool at a hotel and you're trying to sell him a bottle of water that, and they're giving away free water, he's not going to buy it from you. But if he's dying in a desert, that bottle of water is priceless now. He'll give you anything for that bottle of water. It's perceived value. So, we got to be honest with ourselves. You can be as bullish as you want on an asset, but you need to understand and be honest with yourself on what is its actual value. What does it actually do?
Yeah. And I don't know, man. After taking a look at that Ethereum Foundation and their manifesto, it's like, ugh. And then, looking at XRP and like just kind of gross. And you take a look at something like Tron and it's like, okay, well, meets the trifecta, but I don't know how I feel holding a token or a coin where like I'm never going to use that chain for anything. And I think that the guy who founded it is a straight up scammer. So like, that's not good. And then I go down the list. Okay, Solana, basically a casino, like trying to get DeFi and like RWAs on there. So, okay, maybe there's something there. Sui is just a VC coin. Maybe the Move programming language gets used for like healthcare at some point. And then I take a look at like most of the tokens in the EVM chain ecosystem. Like most of them are just straight up garbage. I think Hype is probably the only one that's worth anything, but it's got a bunch of regulatory risk. You take a look at like, so I just went through Bittensor TAO. We went through that today. And I'm not going to lie, dude, I didn't understand what the fuck that was talking about at all. Yeah. So like, all right, I can't buy something if I don't understand it. Mm-hmm. So like, okay, still running through the list in my head, right? So that kind of leaves me with Bitcoin. That's basically what it leaves me with is, okay, like if I'm taking a look down my list here, like, okay, here's Bitcoin. And then I've got Ethereum with like, a bunch of crazy people at the foundation. I got Solana right here where like, look, it's still a meme coin casino, although they're working on, generating RWA adoption. I take a look at Tron, which has performed extremely well, but I don't trust the founder at all. I take a look at Canton, and I mean, I like what they're building, but dude, it's like super centralized and it's super inflationary still. So like, I don't know, I want to make money, not lose it. I take a look at Monero, and didn't this thing suffer a 51% attack recently? I think it did. But I like the decentralization of it. I take a look at Bittensor TAO. I still don't understand it. I look at SPX 6900. This is a straight up scam, but it's got a great community behind it. It's, a meme coin. So, I mean, this is the gamble, right? And then you look at just about everything else, and it's like, all right, well, Near with the cross-chain intents, this is brilliant tech, but the tokenomics aren't too hot. I look at Pendle. I love the yield stripping that goes on Pendle, the protocol. but I don't think that the tokenomics are worth anything. Venice AI, VVV, I mean, I don't know. There's a lot of competition in this space. Now you take a look at Hype, definitely meets the trifecta, a lot of regulatory risk. Take a look at Lighter, LIT. This thing looks like it could definitely compete with Hype. You take a look at B&B. The thing for me, and I see in the chat, Crypto Stevo, you're talking about B&B. Lots of users, lots of revenue, and it bounced off the 200-week moving average. That's for sure, sitting at a level of resistance. I'm just thinking to myself, like, I don't know that I really want to hold the Binance coin, man. So I'm looking at all this stuff, and it just drives me back to Bitcoin. Like, that's what it does. Like, all these things just drive me back to Bitcoin. And like, it comes down to trust. Like, that's really difficult in this space. Like, how am I going to trust Ethereum when I know that there's a foundation that puts out like some pretty insane looking stuff with that manifesto? And then what? I'm supposed to trust Tom Lee? And then you take a look at Solana, looks pretty centralized to me. Tron, I can't trust the founder there as far as you can throw him. Canton, I would love
he
to
might
see
be a
that
little
next
guy.
week.
He might be able to get some air out of him.
I think so. And Crypto Steve was like, well, they don't have all the scams on Binance that they used to. It's like, I don't know, man. not as many scams is not exactly like a selling point.
Like she only has a couple of VDs, not all of them.
God. So, dude, like, this stuff drives me back to Bitcoin. That's what it does. Now, am I going to hold some of this other stuff? Yeah, because I want to make money.
Because you're a dirty degen like the rest of us.
But dude, at the same time, like, if I had just bought Bitcoin last cycle and said, fuck all the other stuff and just bought Bitcoin, I would have done better, man. What the fuck? Like,
oh, dude, no, I would have. Yeah, I would have I think it was like 6 or 8x'd, my freaking portfolio.
Like, what are we even talking about? Like, we do all these deep dives, and for me, it's just like opening up my mind to the fact that, oh my God, like, bro, crypto is bullshit. Like, most of this stuff is vapor with there's no there.
But I know people get upset with us for saying stuff like that, but I mean, you call us all the names you want. Truth is the truth. There's 54 million different cryptos out there. You really think that all of them are going to the moon? I guarantee you like 99% of them are going away. And there's going to be a handful of them that are going to be the Microsofts. They're going to be the Googles. They're the ones, and you can kind of see it. Somebody in the chat earlier was saying that, in the bear market, you can see who it is that is actually getting adoption, that people are actually building on, that's actually making money to where they don't have to dump the token on you, because those projects haven't pulled back like 90% or more. They pull back maybe 40% or maybe 30%. You
see what Moonman's saying in the chat? Name one project that you're actually bullish on. I'm bullish on Bitcoin, man. Bullish on Bitcoin.
Bitcoin, ETH, Canton, Hype, Tron,
Sol, Monero. Monero. I'm bullish on these projects too. I think that they're going to do well. But like, the more that I start to learn and understand about all of these other projects in crypto, the more that it makes me think like I might be better off just buying Bitcoin and literally nothing else. Like, I'm not going to do that, but like, man, it's starting to enter my mind. Like, should I literally just buy Bitcoin? I'm starting to think about that.
What I'm going to do is I'm going to play it really safe, and I'm going to invest in USDC.
Oh God, you're guaranteed to lose money with that. Yeah.
So Jake Claver is going to be on tomorrow. We're going to have a busy day. So we don't have any more shows today, but tomorrow we have the morning show. Immediately after, in the first hour of the morning show, Jake Claver is going to be on. A huge XRP maxi. He's going to be talking with David. I'm going to kind of moderate. It's going to be a quasi debate. It's more going to be kind of a Q&A. But immediately after that, we're going to be doing the spaces for Canton News, and we'll be talking to a new project on the Canton Network. And tomorrow we have the Red Pill, which is in the evening, where we talk conspiracy theories. So busy day tomorrow. So make sure you join us for all that. But David, you got any closing thoughts before we go?
Yeah, so if you guys get some value from what it is that we do, hop on over to the node.pro and, consider some of the stuff that we got here. Most of it's free, man. Like hop into the learning section and, run through some of the course material, learn about Bitcoin, learn about Ethereum, learn about true DeFi. There's a lot of value there. Hop into our community where you can post content about anything, crypto, DeFi, Web3, digital asset related. Take a look at the live calls that we offer. We've got a live call today at 5 p.m. Pacific, or at 5 p.m. Eastern. So 5 p.m. Eastern, 2 p.m. Pacific. This is one of the premium live calls. And, this is, so Moonman, if you think that we're not as open-minded as we say, then hop into the premium live calls and tell me about it. I'm just trying to understand why you say that.
Actually, we never claimed to be open-minded.
I mean, I'm just searching for truth, man.
Yeah.
And the more that I learn about this space, the more that I think I'm starting to realize, like, oh man, like most of this stuff is not what I thought it was.
Yeah.
So, yeah, but I mean, there's a ton of free value in the Intel library, and the weekly Intel overview is published every Friday. And if you're looking for private coaching, I've worked with over 400 private clients in greater than 30 countries. I've helped people deploy well over $100 million. And, I mean, look, I've seen it all in crypto and DeFi at this point. So I can help you avoid making costly mistakes. And then like, share, and subscribe, man, on YouTube.
So, and yes, please, the most powerful thing you can do to help us get the word out, because I mean, we joke a lot, and yes, we do say that we're open-minded, and we're open-minded to new information. But once we know the information, once we know the facts, we're going to paint a picture. And like Crypto Stevo says, that we're the antidotes to Schiller's hopium. If you want to, you're more than welcome, and we want you here. And I'm not talking to anybody in particular, but there's plenty of places you can go. If you want feel goods and you want, people to tell you how smart you are and how you're going to be on a yacht in the future and buy an island and you're all going to party together. And if you want that, there is endless channels you can go to for that.
Honestly, the XRP guys that we bring on, they're great. It's so much fun to talk to them. Like last night with Easy XRP, Easy or whatever, dude. Yeah. That was a very entertaining conversation. So
exactly. Xander. It's we bring people with opposing views on the Red Pill. It's our conspiracy show. I love differing opinions. I love civil discourse. But when it's fact-based and logic-based, because you can't debate your feelings. If you feel a certain way, you can argue about that all day long, but you're free to feel however you want. Does that make it true? No. So that's why we focus on facts here. We focus on data as much as possible, and then make sure that we state if we're speculating. I learned drugs are bad last night. Yeah. So again, if you want, pure speculation and feel good and hopium, plenty of other channels. We are here to be real. We're here to give you facts. We're here to give you data. We're here to peel back the layers and show you, the token that you're buying. What are the odds that you're going to see? Not a guarantee, but what are the odds that you're going to see token go up? That's why we're here. So,
hey man, you know what? I appreciate everyone for joining this call, and I think that there is going to be a massive rotation of capital into crypto and DeFi and Web3 and digital assets. The entire financial system is being rebuilt on top of this stuff. So all that we're doing here, when we go through and educate ourselves and all of you on this stuff, we're learning together. And, we're finding, hey, you know what? There are flaws in all of this stuff. But as long as you go into this as educated as you possibly can be, then hopefully that gives us all the best chance to succeed together. We're all going to make it, man.
That's what we're here for. So anyway, appreciate y'all, and we'll see you mañana. I'm gonna go and start doing some work on the cabin, and we'll see you mañana with Jake Claver for the morning show. And until then, Veteran Crypto out.
Peace.